We're joined now by Stuart Thomson. He helps to oversee $100 billion at Ignis Asset Management in Scotland. Stuart, good to see you. Did yesterday's downgrade surprise you?
Well, just the timing, but the role of rating agencies is to provide reassurance right up until the last minute and then to panic. And as markets started to panic, so too did Standard & Poor's. And we would expect to see more of this.
The EU and the IMF are now talking about as much as 120 billion euros of aid for Greece. Do you think that is enough to spark a rally in Greek bonds?
Well, it depends what sort of terms this is taking place under. Obviously, this is a substantial amount of money, which covers about half of what's required over the next 5 years. So it is a very important loan. But the terms have to be acceptable to the Greek population as well. Remember, the Icelandic population rejected the terms of their repayment.
So how do you assess the possibility of a default then?
We think that default or debt devaluation has become the new currency devaluation within the Eurozone. In other words, there has to be some cut to the creditors, and we think that is a debt restructuring, a haircut, and we would expect to see that take place in Greece over the next either the next 6 months or the next couple of years, and that should spread to other countries like Portugal.
Stuart, what's the difference between that and an actual default?
I think it's semantics, but what's important is that it provides relief. It shares the pain between the creditors and the debtors. Otherwise, it's the Greek population who are suffering all of the adjustment, all of the deflation, and that is, from a Greek perspective, unfair.